Good afternoon, everybody. How is everybody doing this afternoon? Everybody give a nice hello out there. Welcome, 5 o'clock on the button. Usually get started right on time, usually end right on time, 1 hour. Don't like to keep you here more than that. Hi, everybody. These are the DTS educational events Wednesday nights. There's always some new people here, so just kind of follow along. It's just some good educational content. I've been doing them for, well, it's going to be going on 5 years this summer, and really pretty much no repeats. Occasionally I share some information from one to the other, and this one here actually you could kind of look at as a repeat, but it was 3 years ago, and I just want to give some new information, some new ideas, some new concepts. So let's get right to it and start running through what we're going to be doing tonight. It's called A Moment in Time 2 because over 3 years ago there was a moment in time, and I did borrow a couple of the slides from it. You saw this slide, or you could have seen this slide, so you could have read that if you wanted to. If you don't want to read it, that's fine too. We'll get right to the point here. These 3 slides are actually, I started to write new slides. I said, well, I wonder what I said last time. And I went back and I decided it was kind of hard to beat what I had. So I just kind of borrowed these these slides. Introduction, kind of what I said last time, trying to introduce what a moment in time is. But then I added some new material to maybe help explain it a little bit better. Some you may like and some you may not like and some you may be a little bit offended by, but let's go through what it is. As I set out to define what this style is, if you call it a style, I found it may be useful to review some concepts that I've lectured about in the past. Trading investing is not about fundamental analysis and news, it is about technical analysis. To that there is no discussion, but that's for another day. It is not about finding perfect patterns, it's about great overall technical understanding. There's been some topics on that may confuse you, but it's true. It's not necessarily, it's fine to find great patterns, but great patterns with okay entries is not as good as okay patterns with great entries. Again, a little maybe difficult to understand. It's not about 100% certainty or guaranteed positions. It's about math and probabilities, and only to the extent that it's at about a 5th grade level, nothing complicated. Trading investing is not about reading opinions of markets or the economy. It is about, well, as I say sometimes, playing a video game. You're reading the information in front of you, and the best way to explain that in one sentence today, these topics are discussed more in the Introduction to Mastering Technical Analysis class, which will be a week from Friday. But in a word today, it's not to say, it's not even the debate or discussion whether or not you think somebody's opinion or fundamentals or whatever are right or wrong. What matters is how prices react to whatever it is you're talking about. And that's why I truly equate trading and investing long-term, short-term, it doesn't matter at all, to playing a video game, because you are watching the screen in front of you and watching the reaction to various things and then understanding what that means in terms of the balance of buyers and sellers. And that's what we do. And that is the ultimate end all. Anything else that you try to do to shortcut that is simply shortcutting the correct process. It is not about forcing concepts you don't understand. It is about playing inside of your zone of comfort. Confidence is necessary, or you'll be forever frozen at the keyboard. Next slide. The confluence of relevant multiple time frames. Nothing is more important. Moment in time is about you don't have to know where prices are going to make money. That's one of my favorite lines, one of my favorite sayings, and it's kind of borrowed partly from a phrase from Mark Douglas: you don't have to know what is going to happen next in order to make money. Better to have a great entry to a so-so play than a so-so entry to a great play. One of the things that I absolutely believe. It's about making money. It's not about being right. There is a difference. So those are some introductory things to this concept, and if you kind of understand the concept, you maybe see how those relate to it. And there's one more here. In a sense, any good position you take, any good trade, long-term, short-term, bullish, bearish, whatever it is a combination of these two things. Great technical understanding. You know this is the general area the prices will hold, reverse, or continue due to a very strong bias on the bigger time frame, but the exact area is unclear. You're usually correct, but due to the lack of exactness, you're not able to make as much money as entry and stop and target areas are unclear. And then that moment in time comes in. You find a precise area that is the key or focal area. You are not sure if prices will move, but if they do, this exact place is the launch pad. You may be wrong, but when the payoff is big and you are in a ground zero, it pays for a few failures. So that's kind of stuff from before. If you go back and look at the other one, you'll see those 3 slides. But let me continue and try to expand on that, because this is always a big topic, because I get a lot of questions on it, and because in some sense I say this is what trading investing is all about, that moment in time. So perhaps a moment in time, by the way, this is going to be loaded with charts. When I get through these introductory slides, I said that, so this is one that people will like a lot. I don't know if you will like the end result of seeing all those charts, but you will see a lot of charts here. Perhaps a moment in time is simply the pinnacle in understanding technical analysis. Let me pause for a minute. What do you think about that? I think that maybe is, if I picked on some words here, and I know a lot of you understand this, a lot of you are in the seminar program and truly understand what a moment in time is. Several of you, I know, maybe kind of think you do, but you're not really on track for what it is. What do you think of that definition? Just the pinnacle of understanding technical analysis. Because when I think about it, that's perhaps what it is, because it is hard to understand it if you don't have a real good understanding of technical analysis. Most of these examples are longer term examples. The most extreme is finding a weekly or monthly buy setup and entering it on a 5-minute chart. And it's kind of what, I'll explain more what I'm talking about. This isn't about necessarily doing that all the time, but there's kind of 2 concepts I want to explain as we go on through the following slides. And that is what theoretically the moment in time is. But the other issue is that, the moment in time is not always realistically something you're going to do. I guess the ultimate goal would always be to find the moment in time. But in truth, that's not even right, because the true moment in time sometimes is something you would never do because it is just too against the odds. And I'll show you what I mean with some examples in just a minute. And yes, this applies to day trading, but since the 60 is the concept of the strategy from the biggest, in other words, whatever you're day trading, the biggest time frame that your strategy would occur would be a 60-minute chart. It may be less than that for you, but that would be the biggest. So coming down from a 60-minute chart and finding a 1-minute time frame entry is not really a big deal. It's kind of what I do most every day. But that is, in a sense, kind of that moment in time on an intraday basis. But you see it more extreme on longer-term patterns because you're condensing all these time frames down to that little moment, the birth of creation, if you will. For that reason, perhaps some of the following charts may not make sense or seem simple, or they may seem simple. If it seems simple, you may not be getting it at the right level. These are not simple to find. You may understand a weekly buy setup to some degree. Now, I use the words sometimes buy setup and breakout just kind of like in English vernacular, meaning just in just the English words, because everybody probably has some kind of definition of what they think a buy setup is or a breakout. There are very specific definitions that I use in my training at DTS, and then it would be called a DTS breakout or a DTS buy setup type of thing. So when I use the words in quotes like that, I'm not referring to necessarily what you seminar students would know as the exact definition. I'm just saying, just generally speaking, there's an understanding of technical analysis that's some kind of breakout concept, some kind of weekly pullback buy setup type thing happening. And everybody has some kind of idea what weekly buy setup is, but listen to these words really carefully because I think they're very important. As a matter of fact, this says this on the home page of DTS, down at the bottom under warning. It's said it since day one. But you may understand a weekly buy setup to some degree, but you will not make money over the long haul as the total concept you're using. It's the kindergarten level. In other words, if that's what you're using, and I don't care how good you are at it, if your concept is to enter something in a weekly buy setup, you're not going to make money really over the long term. You'll make some money sometimes. You're never going to be terribly happy. And if you're earning your living at this, you're probably not going to make a living. You're going to be making a little money, break it even, whatever it is, even if you're good at it. It takes more of an understanding, more of this concept I'm explaining today about a moment in time. So the following slides we're going to look at, it's a silly phrase, but it actually makes sense. The tail wagging the dog in a good way, the tail wagging the dog in a bad way, and then the dog wagging the tail, which is what you normally do want to do. And now I have a debate which I have been fighting ever since I started talking because I was going to maybe do this and not let you see that slide. I had sometimes words pop into my head when I'm walking around or driving around or something. And when I was kind of preparing for this, maybe on Monday, and I'd also been talking to two or three students over the last couple of weeks, and I get a little frustrated sometimes. And I recorded a bunch of comments and emailed them to myself when I was out driving. And I found the comments this morning. I said, oh, yeah, I forgot about these. And the intent was to put it in here as kind of a rant. And then I thought, you're not really prepared to do this. It's not probably smart. That's why it says that. And they're just sitting here on a little notepad in front of me. And I do think I want to touch on these for a minute because, especially if I preface it with this, the only reason that I'm saying this, well, let me ask you guys. I've been talking here for 10 minutes, just kind of introducing this topic. Why would I want to rant at you guys right now? And I say you guys, it's not all of you, obviously. There's the large numbers of you are doing great. A large numbers of you are students that are doing great. Some of you are maybe not students that are doing great. The majority of you are, trying to find your way probably, or trying to figure out what you're doing. Yeah, think before you tweet. But why would I, if I'm going to say this, what's my motivation to say this? I guess my point. If you understand my motivation, nothing I say can be taken incorrectly. No, not sure what that means, Scotty. You missed the short yesterday morning. You said it wasn't a good time. Yeah, exactly, Dave. Yeah, just to help. I mean, that's my only motivation. I mean, many of you know me, and one of the comments I get is that I am just so helpful to people. I mean, whether you're signed up, not signed up, I have some people I help that are not part of any program. They don't even pay any money. I just try and help them as I can. Naturally, I take first preference to try and help the seminar students. But even the seminar students, I get so many people saying, you just go so far above and beyond. I enjoy doing this and enjoy trying to help people. And also simply, I take a lot of pride in trying to make successful people out of the traders that come here. So anything I'm saying is just in an effort to try and help you. But it seems like lately, and again, don't think if any one of you is listening, I'm speaking about you, because this is about several people, and it happens over time. And just lately, it seems like I've seen more of it. Let me start by asking you a question, because this is the heart of what I want to get at. And this is a little aside from the presentation, so forgive me. For those of you who have heard me talk more than 3 times, let me ask you a question. Do I advocate or do I say that what I teach is the only way to make money? Do I say that? Do I say the DTS way, my way, the language of charge, this is the only way you can make money, and if you can't do this, you're lost, right? No. As a matter of fact, I'd say there's many ways to skin the cat. And Eric, how many times have you heard me say that? That there's many ways to make money. I mean, 20, 40, 50, 100, I mean, you listen to me a lot. I mean, right, more than you could probably count, right? 500 times at least. Thank you. Just a little reality check for me, because I want to make sure that I'm accurate in thinking that I do say that all the time. But here's the point I do want to make, though, is that you have to have some method. You have to have some concept, some objective concept, because what we know for sure is that most people just come to the market using the seat of the pants method, and they lose, right? We know, I don't know what the real stats are. I don't know who knows the real stats, but the vast majority of people who come to the market, end up losing. Again, what do you call losing? I don't even know. I mean, if you set out to day trade and you make money over 3 months, but not enough to live on, you have to quit. Are you a loser? Are you a winner? If long term you make some money, but then you give it all back in 3 years, I don't know what the definition even is. But certainly a lot of people struggle. They're not where they necessarily want to be. And the reason is simple, because they really just don't have a concept that they're doing. So if you don't learn one, you need to learn one somewhere, somehow, a definitive, objective way of evaluating things. And let me tell you what most people do, because I run across it a lot. What most people do is, and these are people that have, quote unquote, studied technical analysis. But what they will do is they'll have an opinion on a stock, and usually that opinion comes from reading something, listening to somebody, a fundamental article, a news article, whatever it is. So they have a predetermined bias on a stock. And then they go to look at the chart, and somebody tell me, what do they do? What do they do? There's actually a single word for it. Right, exactly. Justification. Roger, it's exactly the word. They want to justify. And it's easy to tell, because I get comments back about the chart that are like, what does this mean? I mean, is this some system you've learned? If you learn some system I'm not familiar with, and you know exactly how to spot it, and you have proven that this does make money for you, whatever it is, however you look at it, I'm fine with that. But that's not the case so many times. It's just the case that they're just making abstract comments. And I've heard some crazy ones. I want to go long because the downtrend is slowing. What? That's not a strategy. You know what I mean? So I just wanted to take this moment. I have all kinds of notes here. I didn't even look at them really. Well, let me do kind of read this. I can't really read it because it's written in gibberish, but technical analysis it has various degrees of understanding, right? When you start off, and this is just kind of my view of things. When you start off, you sound smart, but you lose money. Can anybody kind of relate to that? Does that kind of make sense? You sound smart, you know everything, but yet you lose money. As time goes on, you start to not sound as smart because you get a little confused, but you start to maybe make sense of stuff. You start to make things work. The, the kind of words that I use is go around like a support level. When people start off, they'll maybe say, "Oh, I'm going long here because this is support." And the truth of it is, when you look at the chart, it's not even support. It's just not. They think it is because somebody told them that's support, but it's not support, right? And then they get a little better, and then they start to realize that maybe that's not support, but this is better support. And they do get a support area, but the pattern is so wide that they get in and they still stop out. Or they get in and they can't make money because the pattern is so wide. They just don't know enough to find the exact area, right? And then they start to realize, that may be a support, but what would confirm it is if I could see the reaction to the support, right? And then the ultimate thing is to find that maybe there is support and then to find the moment in time that support proves it holds. So that's kind of my little walkthrough of going from just kind of justifying a pattern to actually having the pattern prove to you that works. I don't know if that was helpful at all. That's extremely true, Paul. I mean, one of the things I talk about in general in order to be successful is you have to build some confidence, and you can't build confidence when you're unclear. I talk about, people lecturing that if you give a lecture to a huge group of people, if you know what you're talking about, you have confidence, you're very good. If you don't know what you're talking about, you have no confidence, you're unclear. So anyways, let's go on with the presentation. That was my little rant there. And again, the only purpose was to try and help some of you. Whatever you're doing, all I really ask is that you stop and do a reality check once in a while. Just do a reality check. When I hear from people, sometimes they say, I'm struggling. And if they say they're struggling, right? But sometimes you hear from people and they say, oh, I'm doing okay, I'm doing pretty good, I'm doing all right. And then I don't know, because most of those people are probably struggling too, because most people are very optimistic of their future, which is good in a sense, you should be, but they're not realistic sometimes. And you've been at it for weeks and months and you're just not making progress, stop, quit, do something, get help, whatever you're going to do. But you have to show progress all the time, right? You have to show progress, or in anything in life, right? Well, I really contained it, Scotty. Yes, I did. I felt like I was about to go into it Saturday at the coffee thing. I felt I was on the verge, and I stopped myself Saturday. So I decided, instead of ranting, to just have a controlled talk about what it was. And all right, so let's get going here. So now here comes the fun stuff. This is the tail wagging the dog in a good way. Now, this is what I'm talking about. For those of you confused about what I mean by moment in time, it's all going to come very clear right now. Here is CLF, the chart. And for these next 3-4 stocks, we're going to go through 4 charts, a weekly, daily, 65, okay? So here's a weekly chart of CLF, okay? And I want to look at this move from here to here. Everybody see this move? Everybody see that move? From right there to right there, right? Boom, 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 boom. So there's a heck of a nice move, and now I want to talk about that. Where was the birthplace of this weekly move on the chart? Well, let's take a look. So we're talking about zooming into that very bottom there and saying, is there a way to find? Now, naturally, understand there's a little implication here that with finding the moment in time is that it's a strategic moment in time, okay? I know you could go to the low of that bar and click on it and tell me what it is to the penny, $15.11, and just say, oh, you could have bought that. Okay, I'm not talking about having the knowledge of God. I'm not talking about that at all. I'm talking about going back and finding the earliest strategic moment. Does that make sense, everybody? So it's not so simple that you just click on it and say, oh, that's the low, right? I mean, nobody would know to buy that. I'm saying that if you were to go back and find the strategic concept that could get you in at the earliest possible moment, where would that be? All right? Does that make sense? All right, here we go. So here's the daily chart. So on the daily chart, that move started right there and it ended right there, right? So on the daily chart, naturally, I'm not talking about just guessing that, gee, that was the low that day. We would never know that, right? We have no way of knowing that. So on the daily chart, I'm saying that strategically speaking, that bottom where we gapped above that little there, that was the first time you could look and say, hey, here's something that could ignite some kind of move. Now, if you're thinking this is weird, just bear with me a minute here. Now that there, and just excuse me, I'm going to make sure you're following me. Let's go back to the weekly chart. So this weekly chart right here, you can see where I'm pointing, right there. That moment on the weekly chart is this on the daily chart, okay? So there we go. Now that little gap up day right there, that's going to be this on the hourly chart, right there. Boom, there it is. So this is what becomes our moment in time now, in that we are now transitioning out of a downtrend on the hourly chart, the earliest possible moment, and the moment in time would be to buy that 5-minute dip on that bar right there. Do you guys follow what I'm doing here? And let me go to the 5-minute chart. There it is, right? So what I'm saying is theoretically, but realistically, you could have bought that 5-minute dip, 1742, stop 1718, about a 25-cent stop. And that theoretically, if you would have stayed with it, could have taken you all the way to that high. Now, the reason this chart is here is for a couple different reasons. Number one, matter of fact, I have some comments here. When you go back to this hourly chart, was that a great day trade that day? Was that a great day? Forget every other chart on the planet. Was that a great day trade that day? Yeah, absolutely. Don't even really need to see anything else in that case, right? That's a great day trade in that case. But here's the question. Would you really expect that day trade entry to take you from here to there? Would you expect that? Would you have expected that to have happened? No, not at all. And see, that's my point on some of these, is that just because that was the birthplace doesn't mean realistically you would ever really consider doing that, because you could go to every rally, go back to the moment it ignited, and most of these you would never ever take. It's back to that 97% rule. That 97% of the charts you look at are garbage, right? 97% of the time this isn't going to happen. So it just so happens that yes, that was the birthplace of the move, but at the time this happened, you never would have expected to be in that. And this is what I mean by the tail wagging the dog in this case, right? Exactly. So it's a great entry, but would you really have the expectation to hold it for a long time, not based on the rest of the charts? Stuff happens. We try and find charts where you can see a pattern, what's going to happen. But moves happen, patterns change, trends change. It all happens because big money comes in and changes patterns. So this daily chart went from some kind of a downtrend it was in. Was it in a downtrend? Yeah, it was in a downtrend, actually broke support in the weekly. And just out of nowhere, it just held. This happens all the time. That doesn't mean you're supposed to know to go long here. And this is where a lot of people get confused. They look back at charts and they try and reverse engineer stuff and they say, well, how would I have known to go long there? And the answer is you wouldn't. You would never know that. I would never have gone long here long term. But this is the tail wagging the dog, meaning it was a really nice entry to a day trade, to a 2-day move, whatever it was. And for some reason, it just turned out to be the birthplace for a really big move. Okay? Let me show you another one. And by the way, these are not trades I ever did. These are just examples of showing you the birthplace. Cisco, big move down for 15 weeks. We're looking at that high to this low on Cisco, right? What was the birthplace of that move on the weekly chart? Well, that very high right up there on the weekly chart, that's going to be right here on the daily chart, right? So you would have had to have come in and shorted that daily chart. What would have given you a clue to do that? Well, you would have had to come in here and realistically, again, not just trying to randomly pick the high, nobody would do that, but realistically, if you thought that was going to be the top for some reason, you would have come in and shorted the first hourly sell setup, and that would have been right in there. This would have been the first legitimate in the world, according to Paul, the first legitimate sell setup you could have shorted. and that would have had you short just off the top of that daily chart right up there, and you could have stayed with it as long as you wanted to, right? And the actual entry would have come on that sell setup when you took out this 5-minute, the hourly pivot or this 5-minute base. So that's where you would have entered that. Now on Cisco though, there's some different comments. CLF was a great entry, right? The one I showed you, that was a great entry. You just wouldn't expect it to develop into a big move. Is that a great entry on Cisco? Forget about how the fact it fell 13 weeks. Was that a great entry even that day, just as a day trade? No, it's not. It's crap. You never take this trade. You'd never take this trade. This is garbage. You're just in a strong uptrend. You don't go short because an uptrend breaks in the middle of all uptrends everywhere in the world. This is a terrible trade. You would never do this. So here we have the case that this particular entry was not even a concept. This just happened to be, in other words, this just happened to be the high, and this is the point I make sometimes. That was the high for 13 weeks. Well, it could be the high for 13 years for all I know, right? But you wouldn't know that. Charts don't always tell you. We look for the charts that tell us what's happening. But 97% of the time, stuff just happens. So Cisco is nothing, is no trade anywhere. If you asked me to short this that day at the perfect time, if you would have asked me to short Cisco right there, I would have said no. I'd say you're an idiot. I'd laugh, but you could laugh at me later. 13 weeks later, you could pull this chart out and laugh at me and say, Paul, look what an idiot you are. Best trade I ever did, and you said no. Okay, who's right, who's wrong? If you had a concept, if you had a strategic concept that you could tell me what it was and you could find it on other charts and you could prove it to me it works, that's great. But if you just looked at it and said, oh, I don't think that can go any higher, I'm going to short it for the next 4 months, that's just crazy. And this is where people get in trouble. They make some money on something like this, but then they go out and try and do it again and they can't because they don't even know what they did. So Cisco's the example of the tail wagging the dog in a bad way because there wasn't even a tail wag. This is just stupidity, right? Yeah, when I use those words though, Michael, I always say the words I'd rather have a great entry to a so-so setup. This is not even a so-so setup though, that's right. So to me, you can't have a great entry to a crappy setup. There's no such thing as that. You have to have something to hang your teeth on, right? You have to have something to bite into. And if I get a great entry in a reasonable type setup, I'm okay. But you can't just look at pure crap, right? And say, well, there's a nice entry on a 1-minute chart. Maybe the weekly chart will flip around right here for some reason, right? Can't do that. All right. So there's 2 different examples of birthplaces of moves. One that had a great entry, but you never would have expected. The other one is just pure garbage. It just happened to do that, right? Cisco. So now let's take a look at some, what I call the real moment in time trades. The ones that you would say, hey, you know what? That is the birthplace. And you know what else? I can do that. In other words, I can find it. So to do that, I don't want to just pull fictitious stuff out of my butt. I want to show you trades. So these are out of the long-term trader. These are 2 fairly recent longs from last month. And they're both longs. Well, the first one is MDT. And again, this is from the letter, just a copy and paste. This is a letter went out to subscribers, so I'm not making this up in hindsight. This is stuff that happened in real time. So there's seeing to enter the trade. They didn't see anything necessarily. You mean they probably were selling at a certain level? Chris, Chris is a good question, but let me explain. The institutions aren't necessarily seeing anything many times, Chris. They're doing what they do, right? Cisco hits some number, let's say, right? Whatever it is. Cisco hits $64, right? The Cincinnati Police Benevolence Fund has an account somewhere. They have $1.2 billion under management. And whoever is running that fund said, hey, you know what? I bought Cisco at 40 and I have a goal of hitting 64, right? They hit 64. What happens? Well, they're selling $890,000 worth of Cisco, right? They start selling. They're not going to sell it all in one day. They sell it over 2-3 days. And what happens is the price drops down, people with trail stops, people who are making money, right? It's a snowball effect, Chris. So it's not like this is all orchestrated. It's just called crap happens, is what it is. This is how charts are made. And our job is to follow these charts when we can. Sometimes you can't. When you just hit a high in the middle of nowhere, or you just hit a low, and that's why in most cases V bottoms are not buyable unless there's something else going on, unless you have a strategic concept. If it makes sense on a bigger time frame, if it's climactic. But if you just are falling, if you're just in a downtrend, Chris, and all of a sudden you just bounce for nowhere, no reason. That happens all the time. It's not that it can't happen. It's just that you can't trade that because 90% of the time it's going to keep falling. The one time it doesn't, how would you ever know? Does that make sense, everybody? It's why you have to proactively find things and not just look at a chart and say, oh, how could I have participated in that? That's the fool's game, right? How could I have participated in that? Well, probably couldn't, right? Stuff happens. All right. So MDT, you can see the date there, 25th, whatever. There is the weekly chart for MDT. And also, the monthly chart here even came into play. So what we're going to do here, guys, we're going to take a monthly buy setup. And I'm going to be entering, theoretically, on a 5-minute chart. Want to see that? This is the extreme moment in time, right? A monthly chart concept. Now, you heard me say earlier that if you're using a weekly buy setup, a monthly buy setup, you're not going to make money. Here's your monthly buy setup, right in here. There's your monthly buy setup. So there's your stop. It's $12 or whatever it is. I don't even know what it is, right? Inside that monthly buy setup, here is the weekly chart. Can somebody give me a couple of characteristics about the weekly chart that get my attention to say, perhaps this is a fertile area to be looking at to find a moment in time? Obviously, the monthly chart isn't perfect. I'm not going to get into the details of it. It's in an area, right? And that's all you can do with big time frames sometimes, is say we're in an area. But what, anybody pick out a couple things on the weekly chart that really get your attention and say, hey, you know what? Just maybe we can find something here, right? Yeah, I'm not going to give support any credit really, because that would come back to the monthly chart. And the monthly chart, maybe there's that little minor support level on the month, but you're talking about an area that's probably $10 wide, right, Dave? It's a very wide area. So, see, this is what I started talking about. Remember when I was talking about people learning and looking at what support is? And there's that level where you say, okay, there's support, but what good does it do you? I mean, it's so wide. What do we want to see? We want to see how we react to support, right? And here we get to see some things, right? Look at this big red bar and look at the volume, right? So now we see support being reacted to in a way that I understand, right? Hey, Caden's here. You have a unique name, so I know you. I don't know if you were here before. Just for fun, Caden, you are not a subscriber to anything, correct? You don't subscribe to anything, correct? How many emails have I answered for you? Don't mean to put you on the spot, but people probably don't always believe me when I say this stuff. In a pretty timely manner. I take care of my seminar students first, but too many to count. Thank you. Okay. So we have this big volume move here. Now, here's the thing. When you're looking for a moment in time, perhaps you found it right in there. Perhaps you did, right? But I didn't. And if you didn't, perhaps it's just gone. And this happens all the time, right? So now we come down and we get that move. We see some kind of move. But notice we're still in a weekly downtrend, right? Then we pull back, and now we make this higher low in here somewhere, right? So now if we take that higher low right there, and if we zoom down now to the daily chart, boom, 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 boom. Here is that higher low being formed. And coming out of here is what I consider to be the first legitimate daily uptrend buy setup. Now this is not right on the bottom of the whole move. But it is a moment in time, I consider it, because we are getting in literally inside of that little tail there. And that little tail has been the low ever since then and may very well be for a long, long time. And that's the purpose here. So it is possible you may have found your little, I didn't want to find it here because of this gap down through here. That's not a good thing to do. We see it recover, boom, boom, boom. So that's the little moment in time. We come down inside that daily chart in that particular, the first daily buy setup. And here is that daily buy setup right here, that green bar going up. And then we let it pull back, and then this little hourly buy setup that formed right in there, and you can see the entry there, long over 107.66. You can look it up yourself on your charts if you want. And somewhere over something on the midday pattern that day, that was the long in there. And if you come down and look at a 5-minute chart, This had popped, and then this was issued to be long over this little area. So we're actually looking at that secondary sign of strength after some red comes in the 5-minute chart. So we're down to a 5-minute chart, red bar ignored, being the confirmation to the entry, to a 60-minute buy setup. That is the first buy setup in a new hourly uptrend. That's the first buy setup on the daily chart in a new weekly uptrend. Well, Roger, that's a great question. What I was going to go into next was talking about the difference between the tail wagging the dog and the dog wagging the tail. You may get lucky sometimes. You remember the chart, Roger, on FCX, right? Maybe the weekly chart looked good on that. And once in a while, I get lucky. Once in a while, I look at a daily chart, I go, wow, what a great entry, or an hourly chart. And I look at the rest of the charts, I go, oh my gosh, this hourly chart is actually setting up as a day trade, but it's perfect on all the other time frames. And that's just kind of lucky, right? You wouldn't expect that. But the way you find these intentionally, the dog wagging the tail, which is what these are, is that when I see this weekly chart back here, Roger, when I see this red bar coming down inside of this monthly chart, guess what I do? I save it. That's my long-term list, right? And I look at it, not every day, but every day that I'm interested in taking a new position in the long term. I'm not taking new positions every day. So there's my list, right? And I decide one day, I say, hey, I need a long, and I look and we're right here on the daily chart. I go, oh my gosh, look at that. Get me into this. Give me something to prove that that's not going to make a new low. And because of the confidence you have at some point, you come down and you say, you know what? There's the daily chart, there's the hourly chart, boom. And one last little piece of information, just in case this hourly chart were to do this at that topping tail and then collapse, I'm going to take one last little thing to make sure that doesn't happen to me, and that's I'm going to wait for the 5-minute chart to get over that. Okay? Does that make sense, everybody? So this is the true concept of a moment in time. And it's starting from the top down to say, give me all the stuff right on the bigger time frames, and then zoom, 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 zoom. Now, do I get to do this all the time? No. A lot of times I look at the chart, it's gone. You hear me all the time, right? You guys that come on the Monday night bi-weekly thing, I'll clean up my list and I say, well, that was a great chart, but it's gone. It's gone, right? A lot of these things just go. And naturally, you could be more aggressive jumping on some of these earlier, but then what you're not seeing is all the ones that maybe would have stopped out. So there's that balance that you want to do. And I'm always looking for that moment in time somewhere. This next one here is better in a sense because this moment in time really occurred on the daily chart in the first daily uptrend. This next one here is CL. This is along about the same time. This is on the 21st, so it's just a few days earlier. And here we have a weekly major support area. So we're looking at the stock right in here. It's on this last red bar here that we're looking at. Okay? Let me take a quick catch up on my slides here real quick. This is CL, like Colgate. I sometimes call it Clorox. I don't know why. Clorox is CLX. Toothpaste, bleach, all the same thing. So that red bar on the weekly chart is this here on the daily chart. I'm calling this weekly major support. What do you think about that? You can see the green line. You can see where we went. But isn't this a short? Didn't we break major support? Isn't that a break of major support? That's a negative ghostwriter to bust the tower. You know, there's another, they're redoing that movie. It's coming out again. Close outside, close inside, get long. Okay. Yeah, it's exactly what you want to see. Now, for those of you that think you're worried about that because you're breaking support, this is exactly what you want to see. Notice the green line there. It's right at $74. Look at the daily chart. I carried that line through to here. And I want you to see that this breakdown, the biggest red bar on the chart, on the biggest volume, and here's the key. You drop 97 bars to support. That little turns out being a shakeout. And what's the key? What's the key? It's the reaction to breaking support. What was the reaction to quote-unquote breaking support? And I'm saying breaking support in quotes because you can call it what you want. The point is this is a long, absolutely positively. What happened? Yeah, we gapped up. Yeah, we gapped up into the biggest red bar and never gave it up, right? So boom, there is that big red bar, and that became the entry right in there. Um, Keep in mind that this was not necessarily at the low of the hourly chart somewhere, but you also have to keep in mind that we're talking about, even as it is, having like a $1 stop on a $74 stock, which is already kind of insane. So at some point, when you use a moment in time, believe it or not, you're actually sometimes are not even trying. And let me emphasize, this is not about just getting a tight stop. Tight stops, 95% of the time, people say, oh, just use tight stops to make money. What do tight stops do for you 95% of the time, everybody, especially if you're not a real seasoned pro? What do tight stops do for you? Yeah, they make you lose money at a very fast pace, right? So this is not about just saying tight stops. It's not what it is. It's about a stop that is so generous you would never consider it to be broken, but yet it turns out to be pretty snug just because of where you're finding it, right? Where you're coming in, where you're zooming down to find these moments in here. So that ends up being the entry. This actually, I get a little mixed up on a couple of these entries, but I think it didn't trigger on that day. So the next day there's instructions entered to just jump in on the gap up. Now, right, yeah. Now I want to go back and just emphasize here that that daily chart, that big red bar on big volume, breaking support is the perfect long. And a lot of you know that. A lot of you would be afraid of that. And some of you would consider shorting that, which of course is what I call the dumbest thing you can do in trading, basically. Also, from the daily chart here, this already hit a target 1 right there. That target 1 was over 4 risk units. And this is considered to be kind of a sideways pattern. I'm looking to take the whole thing up at 85 and half of it right there. So it's about 4 hours, 8 hours, which is a really nice trade. And it's something too that happened in just, I don't know, 2 weeks, whatever it is, 12 days, whatever it was. Now I do want to make a comment here. This is a tricky one on this one, but just in all fairness, this thing on this day right here, if you can see where I'm pointing, it stopped out by 3 minutes. Because there's a time stop on this and it hit it 3 minutes after. I didn't even recognize it as having stopped. Several people who get this letter did not. Some people did. Because I didn't think it stopped. It turned out it did. People notified me. And I reissued a new trade because, number one, I don't really like it if I'm in something and the letter's not, because then I feel stupid. But the trade that was reissued, actually, this made more money. So if you would have stopped out and got back in, it made more money to that target, even including the stop out, because the second entry was actually a little snugger. So it's kind of a moot point. And the point of it is anyhow, is what a great entry that it was. It just so happened this stopped out by a couple of pennies at 10:03, and had it been at 9:59, it wouldn't have even stopped. So there's that one. Beautiful little moment in time example. And again, these are just the 2 most recent longs from the long-term trader. This is how I try and do everything long-term. Some of you go back and know with me, there's been some good ones. Ford, my gosh, Ford was I forgot, a 30-hour trade or whatever it was, on just kind of a very reasonable entry because it had that perfect little moment in time. Speaking of Ford, yes, it applies to day trading as well. It's not a spectacular day trading, simply because you're coming from a 60-minute chart to a 1-minute chart, so not quite as big of a deal. But this is Ford yesterday. And again, it still makes the same point. 60-minute breakout trade. So here is the day before the trade, the wide range bar going up. I see the wide range bar above the prior high, consolidating sideways. Put it on the watch list, see what's going to happen the next day. The next day we gap up a few cents. There's the gap up, and then I said to the room, Ford was one of the things I was watching. If Ford has a little 9:35 reversal time puke, I call it, I'm long. And there it is. Long, 3 cents off the bottom. 3 cents off the bottom. That's a pretty good moment in time, even for Ford. You can see the numbers up here, entered 933, over 1533, and stop under 1520. It never even came close to stopping out, and even today, Ford, if you were holding it with that stop, would still be holding that level. So again, just finding that moment in time. Ford may be one of those that may run. You may look back in 2 months and say, wow, that 20-cent stop, that 16-cent stop actually held for 3 months. It could be. I don't think that's a perfect longer term setup. It has some issues, but it was just a day trade. So there again, trying to find those nice little moments. And by the way, this would have a lot less chance of stopping out than taking under traditional methods. So you have the advantages of when you find that right moment and you understand entries, you have that advantage of being less likely to stop out, making more money. Never a huge trade, but it was a good day trade. I was so worried about not being able to finish on time today, but we're going to be finishing on time. Let me just take a quick moment here, and if I could ask you all, if you like the stuff here, you can go back and watch the prior one. There will not be new information because today superseded that, but there will be some other examples. I don't remember what they were, to be honest with you, but you can go back and look at that one. You can see the date there. You'd have to go, when you go to the free stuff page, you would have to go to the archives page and look for it by the date there, okay? And also, I am a week from today. Oh, there it is, next Wednesday, April 20th, Paul's guest speaking. You could click on that and just register for that. Next Friday, April 22nd, will be the Introduction to Mastering Technical Analysis class, which you are all invited to. You will get invites to that, and then of course the day after that begins the seminar program for those of you who are interested. If you have any interest in the seminar program, shoot me an email. You want to talk to me about it, whatever it is, just get some advice, sign up, whatever you want to do, let me know, okay? Questions? Second moment in time trading, since you usually only get one moment in time, this is a second change. How about when you get 2 moments in time in life or trading? Now, whenever Robert talks, I have to think for a minute if it's going to be a joke. I don't see a joke in here since you usually. Well, there are, in a sense, more than one moment, Robert. It depends how extreme you want to go. I'm going to take this as a real question because it is a real question. Remember, like, for example, on MDT, there were different moments in time here. It's a matter of how. Remember I said these are strategic moment in times, meaning that they make sense strategically. Any trade I take, I can justify what it is. I can say, look, here's the strategy on all these time frames. But you heard me do that today, right? I just did that, right? Remember I talked about these being strategic concepts, right? The moment in time is a strategic thing, right? And it's a matter of how far you want to push on what time frames. So the CL was really, to me, a very aggressive moment in time because the CL was literally, right, the first day into that red bar on a 5-minute chart, right? So that is literally saying that weekly chart, boom, I'm entering on a 5-minute chart right there. You can't, there was no conceivable entry inside of that, right? Robert P. That was the best you could do, right? That was the best you could do strategically. The MDT was not really that case. This was the best you could do in a new daily uptrend, right? But if you would have simply justified this by saying, look, we're in the right monthly area, and as soon as this weekly chart holds on a retest, you could have gone back to that day, and you could have justified this just based on holding this low for this long, right? So you could have come in here and any one of these over that red bar, you could have found entries in here. So it just would have been more aggressive because you were sideways on the daily chart at the time, right? So anyways, Robert, I was kind of talking to you. So do you see what I mean? I mean, you could come back and find more aggressive moments in time. Now, I don't think that's one because strategically it doesn't make sense. But once we start to hold all these times in here, probably maybe the greatest one was that one in there, right? When you came down to retest, you could have maybe had a 5-minute buy setup, right? That theoretically was the entry. That would have been the major support area on the daily chart inside of the weekly area, inside of the monthly area, right? Guys, are there any other questions on this? Here's the thing where I made a comment on there somewhere that you may not quite grasp this, or it may sound really simple to you, and either one of those could be a little frustrating. I do kind of consider this the ultimate pinnacle of understanding technical analysis to be able to do this. And it is really the ultimate way. It's like all of trading. You're not always right, but this really gets the odds the most in your favor, and if you're right, also is the best possible entry. I see a lot of trades that are sent to me, and they're really not any more reliable. And like I said, if you're just taking, one of the things I say is that if you have strategies and strategies have built-in entries, you're probably struggling to make money. What I mean by that is there's strategies I look at in terms of deciding where the areas you should be entering. And then we look for these moment in times and special entries, and I teach entries separately. And your entry, in a sense, is, I don't want to use the big words here, but it's inversely proportional to your confidence in the strategy. And that's what helps you in a lot of these cases make money, because always waiting for a weekly buy setup, a monthly buy setup, a lot of times that doesn't give you any more security, and it's making your stop 4 times wider. And maybe sometimes that's what you want, maybe that's fine, but it makes it much more difficult, because in order to make money, you have to, in other words, like on CL, that was a great target, just getting halfway to the prior high. But if you would have used the weekly buy setup, that would have been a 1R trade to there. One risk unit. It's not even worth taking, right? Get halfway back to the prior highs for one risk unit. So that's why I feel you have to understand this at a level to be able to do this with some confidence. All right. Any questions, anybody? We're at 2 minutes to 6. Any questions? For those of you that are newer, make sure to visit the free stuff page. Spend a lot of time there. Free stuff. Prior events, recordings, play of the week videos. And if you include the archives page, you have 4.5 years worth of stuff, so have fun. I have some other stories, but our time is up, so we'll call it an evening. Have a good evening.